Good afternoon. This is Tom Alexander. It is Sunday, November 14th. It is 11:28 a.m. Eastern Time in the U.S. in beautiful Charleston, South Carolina. And we're going to go over some things today. Most of what I'm going to say today, you have heard. The market is, last week I talked about how vertical the market was and how unlikely it was that we'd continue higher at the same rate of change, and that we were probably near a short-term top, and all those things came to pass. And I want to emphasize here that I don't pretend to be a guru calling market tops and market bottoms. In general, you want to be trading with a larger degree of migration of value. You want to be trading market condition and adjusting your tactics and your strategy to market condition. Market condition as defined by auction market principles. So that's the spirit of these reports, and it's the spirit of what I posit as what the current market condition is and ideas about how it may form going forward. So I'm going to start with the indices here. And by the way, do me a big favor. If you like the video, please like it. And if you have not subscribed to the YouTube channel, please do that. And I've been remiss in pointing out, I think you have to click the bell. If you hit the bell icon, what it will do, it will notify you, will automatically notify you when I post something new. I do post something at least once a week. Occasionally I will post something intra-week. So if you want to make sure you don't miss any of that, hit the bell, subscribe to the channel, and thank you for doing the above. Okay, so we're going to start with the S&P. This is the S&P cash. And it's, if you look at my charts, you'll notice the starkness of a lack of colors and lines and indicators and all these other things. You truly can learn to very, very effectively analyze markets using auction market principles. And you don't need those other things. Those other things are implicitly, in some cases, they're explicitly state that they're designed to tell you where to buy and sell, and implicit in that is they're telling you a market condition. Well, there's nothing more consistent, there's nothing more objective than using auction market principles to do that. And really all you need is an understanding of auction market principles. So we are in vertical development, and there's nothing that suggests at this point in time that this latest retracement is anything more than a short-term blip within that vertical development. We have been straight up since the mid-October low in all the indices. And this is a rate of change, as I said last week, is not going to continue, and it didn't. Now, what is the significance of this retracement? We really don't know. It could be a number of different things. It could be the low extreme of a balanced area that does something like this. And this could go on for a week or so. It could be another low, and then we get another move up here, and then we balance for 2 or 3 days, and then we continue to do that into the end of the year. That's a real possibility, and I'm going to show an example of that after I get through showing the 4 primary indices here and the levels that I have highlighted on the screen. The rationale for these levels, and let me give that. There's really no special magic to this. Clearly, the level near this all-time high is important. This is an important level, and it makes sense because we had 2 pretty wide range days down to the downside, and that's something that has not occurred since this October low. The assumption is at this point, until levels like this begin to come out. And also notice where this bottomed. It bottomed into a little bit of volume on the horizontal scale. So this was a logical place for maybe this market to bounce. It's certainly an important level to keep an eye on now. If we were to begin to trade below this level and internal momentum as measured by breadth is very negative, then it makes it likely that we trade somewhere lower in here, possibly to this level. And that's how you can sort of develop an if-then strategy. So going into Globex tonight, we don't have the benefit of it, and trade next week, I would expect to see higher highs by one or more of the indices above the highs of the 5th. So this is the SPX. Let's take a look at these others. Oops. So the NDX, very similar market condition and structure at the moment. Recent highs here, and then this is an area that includes the low from, what was that, Wednesday, and then below here, this is a level I would keep an eye on. And then we can take a look at, let's look at the Dow. Very, very similar structural picture in the Dow. You can see this low formed in the neighborhood of two other lows, and then the low on Friday was also in the neighborhood of the low from Thursday, and then so et cetera. So this is clearly an important level. Below this level, the next objective level, I mean, it could stop anywhere in here, but this is an area, if it were to trade straight into this, we'd want to take a hard look at what all four of the indices are doing. We'd want to take a look at internals. And then Mr. Russell, and you know, I pointed out that I feel that the breakout of the Russell to the upside out of this multi-month balance area that formed for most of this year is bullish intermediate to long term for the market, and that any top that we see, as long as the Russell doesn't close really below this level, I think that we'll eventually see higher highs. And this could extend this bull market that we have for many, many months into the future. The fact that it broke out, this is a signal of that. Okay, so that's looking intermediate to long term. We're talking months. So the immediate key reference areas in the Russell include the area near the recent highs, and then the pivot low that formed on Wednesday, and then below there, this is the level of the breakout of this balance area. So if we were to trade back into here, I would be, at this point, based on information at hand, I would be looking for a low here. Now, if we get into this area, it opens up other possibilities, and I would be really surprised, frankly, if we were to close below 22.52 or whatever exactly this is here. This isn't exact, okay? All right, let's take a look at the profile view of this, of the S&P. Now, this is, I'm going to do this. If I remove the splits and remove the splits from this, a couple of weeks ago, I suggested that, you know, we were having an auction. You have to be careful about chronologically defining or constraining the auction process through the profile graph. Now, because this is a computer program, it's binary, you have to have certain rules that it follows. And to do that, you know, you divide it up into chronological segments of some type. But that's not a really effective way. You have to be careful, again, confining and defining the auction process by just looking at the September auction, the October auction, the November auction, because all of this, you know, the auction process is an ongoing process. And the profile graph's highest use is in identifying market condition in the immediate process of what the auction is doing. So to that end, what I'm going to do here is split out. So each one of these letters is a day of trade. It's like a bar chart, except it's letters instead of bars. But it enables to parse out the auction away from just that glob that a profile gives us. And so now we can much more clearly define where we are and the possibilities going forward. And again, where we are, we've had this incredible vertical ramp. This is a distribution. This range is a distribution in auction market terms. A distribution and range are one and the same. And typically at some point, that distribution range will set in an upper extreme and a lower extreme, and you will have a more two-sided market. And that's, last week was evidence of that. This is a more two-sided trade that we've seen. And again, you know, what we may be doing here is something like this, or the bullish possibility here to me is, pull this down a little bit, is something like this, where we just, all the bullish seasonality and all the stuff that you read and see, and it plays itself out in terms of price action, which is what we want to be paying attention to, because all the supposition and all the guesses and all the projections, if those play out, price has to do something. So let's just go to price to begin with. So under a bullish scenario, now I'm not saying that necessarily we do this Monday, but for the sake of brevity, I'm just going to say, okay, we go higher. Well, I don't think we're going to see another mid-October into a top like this straight from here. I think what you'll see, if we do suddenly break higher and all four of the indices make new highs, okay, that's something else we'll be watching very closely next week. If for instance, if the S&P goes to a new high, we want to take a look. What's the NDX doing? What's the Dow doing? What's the Russell doing? Because at minor 2-3 day swing tops, you're typically going to get divergences among the indices at that high that prior to the top. So what I would be expecting would be something like this. And then, you know, it goes higher and something like this. And eventually what will happen is this level will break and this level will break, and then you'll come down and you won't bottom until you reach some level like this. If we get up in here, that type of thing. Now I have put levels in the report to the downside. Let me get rid of this. To the downside that we'll take a look at if those levels are reached. So that's what we're looking at. Okay, and the last piece in the stock index puzzle that we use the market internals. Market internals specifically and simply NYSE data, and I use advancing issues. And I use breadth. Breadth is NYSE advancing minus declining issues, and it is as good a sentiment indicator as you can get. It's certainly as consistent and objective as you can get. It is much better at identifying potential lows than it is potential highs. That's the speech that I give every week and will continue to give, because people tend to hear what they want to hear. And yes, there are significant divergences. Were significant, well, there's still divergence, but at this high. But we're at a level from where all it takes to erase this divergence in the 10-day moving average is 2 or 3 really strong days next week. And then that would be a reset. So this is something we'll keep an eye on. There's nothing bell ringing at the moment here. If breadth gets down at some point, and it will, the negative 2000, then we get interested. That sets up a completely different scenario. But for now, let's just keep an eye on this. We fine-tune this for intraday trading in the live trade room for those of you that might be interested in day trading and intraday and very short-term stuff. Guys, thank you so much for your attention today. Have a great week, and I will speak to you at a minimum next weekend.